if you cast your mind back, we're also impatient. ETH only bottomed versus Bitcoin in summer of 2020. We're not even there yet. We're still in May. It really started outperforming September, October, and then 2021 was the banner year. So the first part, crypto spring, is always about Bitcoin outperformance plus the new shiny thing, kid on the block, which is Solana. The more people get bearish about it, the more they write it off, the more I get interested in it. I don't think it outperforms Solana, so it's not going to change my position because I'm pretty much all in Solana. But I do think that it probably does better than people imagine over the next 18 months.
According to data from CoinMarketCap, Ethereum, ETH, the native cryptocurrency of the Ethereum network, has surged by around 30% in the past week. This rise is buoyed by news that the US Securities and Exchange Commission, SEC, has reversed its stance on the approval of spot Ethereum ETFs. Earlier in the year, the SEC approved 11 spot Bitcoin ETFs, sparking speculation about similar approvals for Ethereum-based ETFs. However, optimism faded when analysts noted that the SEC was not prioritizing Ethereum ETF applications as it had with Bitcoin. Bloomberg ETF analysts James Seifert and Eric Balchunas, who previously gave Bitcoin ETFs a 90% approval chance, lowered their approval odds for Ethereum ETFs from 70% to 25%, citing the SEC's slow response and lack of interest. However, recent developments suggest a more favorable outlook. On Monday, Balchunas tweeted an update, raising their approval odds for Ethereum ETFs to 75%. And noting rumors of a significant shift in the SEC's approach. This sudden change has led to widespread speculation, with many attributing it to the influence of BlackRock and its CEO, Larry Fink. Galaxy Digital's Alex Thorne suggests the SEC might classify only staked Ethereum as a security to facilitate ETF approvals, while maintaining its previous stance against Ethereum. Meanwhile, Real Vision CEO Raoul Pal, in a discussion with traders Mando and OSF, shared his enduring bullish perspective on Ethereum, as well as his views on Solana and Bitcoin. He also touched on the anticipated global liquidity expansion. But before we proceed, please remember to show your appreciation for this video by giving it a thumbs up for more insightful content and turn on the notification bell so you don't miss future videos. Now, let's continue with the video speaking.
Imagine if we wind forward and before we know it, there's more financial assets going on to ETH because you don't get fired for using ETH, right? Let's say more financial assets, and they could be on a layer 2, but it still starts to accrue value because financial assets are rapid velocity and high volumes. That narrative can switch so fast because the meme coin narrative is just a bunch of us who live in crypto land as natives. But really the thing that will drive this space is new capital into the applications layer of what this technology does. All I do know is once you get to network adoption with some real applications, it tends to stick. You know, if you think of all of the other big layer ones that came out in the past, none of those go to all-time highs again because they never got the network activity really. So Solana's clearly proven product market fit. When we abstract away everything from the space, these are businesses that are commonly owned that sell block space. That's all they do. And Solana sells good block space for various use cases. ETH and Bitcoin the same. So does it become boomer or does it matter? I think we need to be careful not to impose how the space is today, which is generally still retail driven and narrative driven versus use case driven, which I think will develop over time, which is like who's actually building, if Disney are building their Web3 architecture on XYZ, it's going to make a difference. It's going to bring in millions more, tens of millions of wallets and tens of millions of dollars of new activity every day. We just don't know what that is yet, but it will shift around.
I think what I've learned from this cycle is to not get attached to the darlings of the previous cycle and think, oh, this is like the main thing. Probably like it's just going to be, I used to think it was like Bitcoin and ETH. Now it feels like it's Bitcoin and ETH and Solana. And probably next cycle is going to be something else.
Well, what I do to help me with this, to stop getting into that trap, is I just look at the cross rates of the charts, like on the weekly chart basis. And just if something is breaking out versus ETH or Bitcoin and it's got something going on, it's very interesting. And that tends to be persistent over a cycle. So I'm looking now at what is the next big trade, because the next big trade is the Solana of the previous cycle. And it's going to be whether it's Monad, whether it's SWI, whether it's Celestia or what. I have no fucking clue. But what I'm doing is, on my trading view, is putting all these charts versus Solana, because I ain't going to switch any money unless I can prove that it's going to outperform Solana. Like I look at the WIF Solana chart, and WIF outperforms Solana. So I don't mind a bit of that, but it's higher risk. So that,
Yeah,
I just put one versus the other on everything.
Regarding Ether ETFs, Fidelity has filed an amended S1 registration statement. This latest update addresses the SEC's approach to staking. According to the block, Fidelity has removed all references to staking in its amended statement, reversing its previous decision to stake a portion of the fund's assets with a provider to generate staking rewards. While the SEC's stance on staking has been consistent, some Ethereum investors remain hopeful that future amendments will allow funds to stake their assets for higher returns. We can expect more developments in the next 2 days, as the SEC is set to either reject or approve VanEck and ARK 21 shares Ethereum ETF applications. Now, let's return to Raoul Pal's video, where he discusses the overall state of the crypto market and the anticipated global liquidity expansion before the year's end.
It's all noise, right? After every halving, we tend to have this transition that I call from crypto spring to start of crypto summer. We usually get this sideways chop, and it's kind of normal. But this market is hilarious because everyone loses their minds, and they're like, it's all over. It's the worst thing ever. Everyone gets chopped around, trading around in stupid shit they shouldn't be doing. And then just when everybody thinks it's never going to move again, it then explodes higher. So, I've been like you, just kind of wryly observing the psychology of this space. I mean, the psychology of this space is basically like an 11-year-old. And when you play through all of this and you ask people their deep-seated fears, everything's going to crash, or China's going to invade Taiwan, or the Chinese currency is going to devalue, or what's happening in Japan. When you play through all of these, the outcome for all of those is more liquidity. Every single one. The only time it's not more liquidity is when the Fed are tightening, as are the other central banks, and they're purposely withdrawing liquidity. Everything else leads to more cowbell. And I just keep that in the back of my mind when everybody starts freaking out. But if China invaded Taiwan tomorrow, it would be the largest injection of liquidity in all history. The other way to think through this, I wrote about it in GMI, which I flicked to you guys last week or early in the week, was that when you look at what happened to the commercial real estate, you look at Credit Suisse, you look at the yen, you look at the Chinese, there's one big story there, which is there's a shortage of dollars, and it just keeps moving around. And then you see Yellen going to China twice. There's a trade. She's the biggest bond salesman in the world. She's now bigger a bond salesman than Mike Milken ever was. So her job is to sell bonds. She needs to go to China and say, listen, guys, can you buy our bonds? And they're going to say, yeah, but to buy your bonds, we need some dollars because we've got debt deflation going on and all our property developers are in debt dollars. So somewhere within there, and they're using Japan as like the threat. Look what's happening to their currency. It's going to happen to you too. Japan actually needs dollars too. So I just think there's a dollar injection of liquidity that's coming to solve this, because if not, China doesn't buy US goods. It's that whole kind of circular world trade thing. Janet's rebuilt the TGA. Her job is now to spend it. Normally, after she's rebuilt it from tax season, there's like a $250 billion drawdown, right? That's whoopee, considering that Powell has reduced QT enormously from 65 billion to 25 billion. So Fed net liquidity goes up. The ECB are going to cut. They've made it really clear they're going to cut as fast as possible. And the Fed will cut at some point, or at least the markets will start pricing it. Then we've got the election. We've already seen Biden talking about just, yet again giving out money. We've got the Chinese talking about buying $40 billion of housing inventory. It's like you can't ask for a better setup. You've got institutions who want to buy and liquidity coming into the system. And then you've got speculative fervor going on because of meme coins. It's like, that's a perfect supermassive black hole to suck everybody in. It's a bit of something for everyone.
With renewed hopes that the SEC will approve more crypto-based spot ETFs, giving institutional investors greater access to the cryptocurrency market, crypto prices are soaring. Ether has surged by over 21% in the past 24 hours, reaching $3,783, its highest point since hitting $4,000 in March. Bitcoin has also seen significant gains, trading at multi-week highs. What are your thoughts on the SEC's sudden reversal? Do you think it is politically motivated? How do you believe this will impact the cryptocurrency market in the coming days? Share your thoughts in the comments below. Don't forget to like, subscribe, and turn on notifications for more enlightening content on precious metals and financial strategies. Thanks for watching.